The simplicity of candlestick analysis is that it demonstrates when there's been a dramatic change of investor sentiment using what we call top-ranked candlestick reversal signals. As we saw this past week, the NASDAQ did a left-right combo. This is one of the strongest reversal signals in the candlestick universe. It is basically a doji followed by a bullish engulfing signal. This allows the candlestick investor to make an assessment of what the overall trend of the market is doing when you're analyzing the indexes and what the overall trend of an individual trading entity, stock, futures, currencies, anything that has fear and greed in it, to be in a high profit situation. Very simple analysis. A left-right combo, very strong reversal signal. What do we expect to see the next day? If it opens positive, it's confirming the candlestick signal. Tells us there's going to be more upside. When it tells us there's going to be more upside, we can see immediately that it's breaking this downward trend channel or trend resistance level, telling us there's a new wave in progress. Knowing that this is the result of this type of signal allows investors to be buying immediately when nobody else is yet buying and taking advantage of the buying that comes in later. Our recommendation or our re-recommendation on CLMT was based upon our first recommendation, which was the bullish engulfing signal, gap up through this resistance area. And then notice the slow curve. This is one of your high profit trade setups. The slow curve is an investor sentiment slowly building back up, and we know what the results will be coming out of that slow curve. A very strong price move. As we can see, this stock is up approximately 20% over the last 2 days. That does two things for the investor. First of all, it gives them the ultimate time to start buying right as things are breaking out. And if you're a stock investor, fine and dandy. If you're an option trader, you don't have to wait around for something to be working. You know exactly when that trade is starting to work. The high profit patterns in candlesticks allows investors to be in the right place at the right time, such as a fry pan bottom. Notice the big slow rounding bottom, and where does the breakout usually occur? Right here where the pattern started. What's the expected results? A very strong price move. So we can make an analysis based upon knowing that there's going to be a strong price move where our next expected target might be, which in this case is probably at the top of this channel. Once again, this allows investors to have ultimate timing for getting into a trade and knowing what the magnitude of that trade will be. And for the option trader, notice on NVIDIA, we had a doji right here at the resistance level. A very simple rule of the doji. It's going to move in the direction of how they open after a doji. When it opened positive, we had two assumptions that were made a very profitable trade setup. One, we had a doji sandwich, which meant the magnitude of this candle right here was usually going to be the same magnitude as this candle right here. That simple rule of a doji is that the price is usually going to move in the direction of how they open after a doji, and so we already know what the magnitude of that potential move is going to be. Secondly, if we know the magnitude of this move is going to be about this strength, what's it tell us about our downtrending resistance level? It's not there anymore. Where's our next likely target? Probably coming back up into the existing trend. Candlestick analysis is very simple. You don't have to be a rocket scientist or a sophisticated technical investor. All you have to know is what usually happens in investor sentiment based upon the signals and patterns that have been produced that the Japanese rice traders identified over the last 400 years. Investor sentiment works the same way time after time. All we're doing is recognizing what that investor sentiment is and taking advantage of it. That'll be it. We'll see you in the chat rooms.